Be Wealthy and Smart, episode 1015.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the number of real estate listings in the U.S. dropping and why it might be about to get harder to buy a home. As if we need that kind of information, it's already been difficult enough for people to try and buy a home. With interest rates rising, prices up 45% since the pandemic, things are really crazy out there. But yet, people need to live somewhere, and they're trying to figure out how to buy a home, and that might be you. But in the last week of June, the number of homes for sale fell below levels from a year ago for the first time in 59 weeks. And new listings were down 29% from the same week a year ago. And that's all with mortgage rates recently back over 7%. So I'm going to share this article with you from CNBC. It has a lot of good quotes in there from realtors and people in the industry. And I thought this would be helpful for anyone who is looking to buy a home in the near future. It says, anyone out shopping for a home on the resale market knows the pickings are slim. They're about to get slimmer. The number of homes for sale this month was actually 7% higher than June of last year, according to Realtor.com. But in just the last week, that comparison went negative, with the number of homes for sale falling below year-ago levels for the first time in 59 weeks. New listings in the last week of June were down 29% from the same week a year ago. That's a wider drop than previous weeks. With mortgage rates surging ever higher, crossing over 7% again on the 30-year fixed Thursday, according to Mortgage News Daily, homeowners have very little incentive to sell their homes. The vast majority of homeowners with mortgages have rates below 4%, with some even below 3%. An even tighter housing market ahead means home prices are unlikely to cool. Prices peaked last June after rising over 45% from pre-pandemic levels. They began to fall because mortgage rates had doubled in a matter of months, but prices bottomed in January, according to the latest S&P Case-Shiller Home Price Index, despite still higher interest rates and slower sales. The ongoing recovery in home prices is broadly based, Craig Lazzara, managing director at S&P DJI, said in a release. Pending sales, which measure signed contracts on existing homes, fell nearly 3% in May from April, according to a report Thursday from the National Association of Realtors. Despite sluggish pending contract signings, the housing market is resilient, with approximately 3 offers for each listing, NAR's chief economist Lawrence Yun said in a release. The lack of housing inventory continues to prevent housing demand from being fully realized. On the flip side, the nation's home builders have been big beneficiaries of the tight market, seeing sales jump 12% in May from April, according to the U.S. Census. Higher mortgage rates have been less of a factor as builders, some of whom have their own mortgage arms, have been buying down rates for buyers. In May, there were twice as many homes that were sold but hadn't been started as there were a year ago. While single-family housing starts are finally increasing, they are still well below historical standards. Builders have also been underbuilding since the Great Recession, meaning the market was undersupplied well before the recent pandemic-induced run on housing. Bottom line, for all the excitement in the home builders because of the need for more supply, the existing home market is depressed and experiencing a serious case of stagflation with little transactions taking place, but still at very high prices, wrote Peter Bookvar, Chief Investment Officer at Bleakley Financial Group. End of article. Yeah, A lot of people were saying last year during the stock market bear market that because interest rates had gone up so much, it was going to crash the housing market. I said, no, it was not going to crash the housing market. There's too little supply. We still have much more demand than we have for supply. And I still believe that interest rates will be coming down toward the end of the year, if not before. And that is going to ignite a huge real estate boom due to lower rates, high demand, and more people then being able to afford higher prices. The bidding wars will begin again. So I think that's in our future. I don't see a housing market crash like many people predicted. So don't get caught up in the fear. There's just not enough inventory to go around, and that is going to keep housing prices propped up, in my opinion. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button, and you'll be notified as soon as new podcasts are available. And all my podcasts are on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.